Toby, thank you so much for joining us here at IMpower. It's great to have you here. Research in Finance has just finished the second wave of its European Fund Selector study. Can you tell us a bit more about the study and where you're at with that?
Yes, as you say, we just completed wave 2 of European Fund Selector study, or Euro FSS as we call it, which canvasses the opinion of around 900 European fund selectors across 8 European markets. We pick up opinion on things like asset manager brand perception, communications, fund distribution, fund selection, all those types of things. It's a very detailed report. We can't go into too much detail about it today, so I'll just pick up on a few of the key points, hopefully.
So your research shows that some brands are strong in multiple European territories, and you talked about the amount of territories you're covering there, and others are more local. How can a single asset management brand succeed across all those European markets? We're talking different languages, different sensibilities, different regulation to a certain extent, so it's quite tricky to navigate.
It is, yeah, it's a great question. We definitely see with the research that there are some brands that appear in the top 10 of recall across all the markets, and they are sort of competed against by the local players. And really the trick we see, or the recommendations we'd see about succeeding or getting brand resonance across all those markets is things like having proper commitment, so sort of 10, 20 years within the market and really sticking with it, making sure you have local offices, employing local people, maybe from competitors as well, who speak the language, who understand the businesses that they're dealing with at a local level. Also having sort of culturally appropriate communications, so it speaks correctly to them, to the individuals you're trying to sell to or get the products across, and also having the right products to suit that particular market within the nuances, and actually understanding how do they need to be spoken to. So from the research we can see, for example, that in Italy they like face-to-face meetings with the fund managers, but in the UK still it's very much about thought leadership, it's about doing things on webinars, so understanding how to speak to those particular markets is critical as well.
It's being authentic to that particular
of course,
space.
Absolutely.
And how important in all of that is the ESG factor, because that's obviously high on the agenda at events like this. So obviously that's going to differ across different geographies potentially as well in terms of regulation too.
It does, yeah. Well, actually, overall it's still growing. It's very important. It's one of the the key things here, but as you say, it does differ by market. So for example, you get France or Germany or Benelux where it's critical and you need to demonstrate your commitment to that particular strategy or that ESG strategy within your comms. But in other markets such as Spain, it's less important, so you might need to lead on other things. It still needs to be there, it's still important, but it's not something that you might need to lead with. But it's critical you understand about the weight of these particular importance of these issues.
Obviously it's a very tricky environment we're in economically. How has the high inflation, high interest rate environment impacted a selector demand for funds in Europe, would you see, and what impact is that now having, and what do you expect to see in the coming year potentially?
Yes, so investment intentions is one thing that's come through on the research for the next sort of 12 to 24 months, and we've seen understandably from the high inflation rate and high interest rates that fixed income is going to be very important, sort of up 30% or so. And ESG as mentioned, but there are differences. So for example, equities, whilst it's on the market in places like Switzerland, it's less exciting, let's say, for places like Germany and the UK. And so those variances are quite important to understand, especially with what type of product you're going to lead with and try and sell to those markets.
What are you seeing in terms of democratisation? That's a word we're hearing a lot. With the opening up of private assets to retail investors, what are you hearing on that front in terms of fund selectors and what they're seeing there in terms of the private markets, if you like?
Yeah, that's really interesting. So that is one aspect that we've seen grow wave on wave with investment intentions. And as the term is, the democratisation of private assets is becoming interesting because it gives you access to more interesting products such as infrastructure, which obviously is a hedge against inflation, but also there's a real interest to get access to the private equity side of things, and also to get access to businesses which are really at the cutting edge. So that might be in the healthcare or the tech sector. So that's offering innovation in areas where there's interest. But it's very useful as well for the asset managers to have those kind of products in their armoury, or those kind of conversations in their armoury, because it really demonstrates cut through. Because what we gather from the fund selectors is they're looking for innovation, they're looking for new and interesting products, and it's a way for you to get their ear and to talk to them. However, it does come with certain challenges, certainly on the sort of retail and institutional side, which the study covers. There's concerns over things like liquidity and also transparency in these markets. So obviously you've got to, if you're getting it, you're going to do some private assets investment, then it needs to be very clear, very transparent, and offer the liquidity which the market demands.
Just finally, that's sort of what you're seeing. What do you expect to be asking about and seeing in the sort of coming 12 months now? What's the next step for you guys?
Well, we'll do continuation of investment appetite because the market has been very changeable, certainly over the past 12 months, and how that will continue. So we're expecting to see that investment intention change somewhat. So when we do wave 3 of this, we're expecting to see that change. Could see more of an increase into the private assets market, especially if things like interest rates continue, and there's going to be some demand for more fixed income. But again, it's coming down to market specific. So this is what you're seeing, is that there are real appetite in specific markets. So you really need to understand that. And also other areas that we'll be looking at will be, as brands, some of these companies really start to push into Europe, some of the newer brands start to get cut through, how that develops, how they get resonance within those specific markets. So yeah, it should be a very interesting next wave.
Watch this space. Perhaps we'll have this chat again in 12 months
Hopefully.
And see where we've got to. Thanks so much for joining us. Great to talk to you, Toby.
And
Thank you.
Cheers.